Hi all, and welcome to today's webinar featuring Specialist Resources Service Provider, Babylon Pump and Power, ASX ticker code BPP. The company's Managing Director, Michael Shelby, and newly appointed Non-Executive Chairman, Jamie Cullen, will provide an overview of the company and its strategy to reposition it towards delivering higher growth and improved margins. The company is also undertaking an entitlement offer and placement to strengthen the company's balance sheet, enabling it to execute its strategic initiatives. The format today will be a presentation from Michael and Jamie, followed by a Q&A session. If you wish to ask a question, please click on Q&A at the bottom of the screen and submit your question in the box provided. A recorded copy of the webinar will be made available following the event on the company's website. Right, without any further delay, I'll now hand over to Michael Shelby and Jamie Cullen. Gentlemen, over to you.
Thanks, Colin. Let me jump into the presentation here. It's our disclaimer. And for most of you already know, Babylon Pump and Power, BPP, we're a specialist mining services company, and we provide critical solutions to blue chip clients in 3 critical areas. Our areas are specialty equipment rental, specialty services, which is vacuum trucks, high pressure water blasting, and asset maintenance and services for mining equipment. The company was founded in 2017 and listed on January of 2018. We started with a blank sheet of paper from scratch, and since then we've seen significant growth in our revenue over the past few years. Recently, we've made a key appointment as a new chairman. Jamie Cullen has joined the company, and with that, we've begun a strategic review of the company. And now that we have critical mass and critical scale, what are we going to do going forward to improve our performance? The strategic review has identified opportunities to deliver growth and improve margins. We're refocused on our higher margin specialty equipment rental and services. We're going to increase focus on water management and power generation assets and servicing the resource sector, expand our environmental industrial services, and refocus our lower margin asset maintenance capacity to support our rental operations. We've strengthened and enhanced our board governance with the appointment of an independent non-executive chairman and split the chairman and managing director roles so that I can focus on running the company and Jamie Cullen can come in and advise at a chairman level. We want to align the board and key management with shareholders. Coming to our AGM later this year, we expect to present a plan to shareholders where the board and key management will be remunerated in line with shareholder performance with share price increase. Jamie is waiving directors' fees to come on board. And I'll hand over to Jamie for a quick comment from him.
Yeah, thanks, Michael, and hi, everyone. Look, I just thought it might be handy by way of background, just noting that Michael and I first actually met back in 2010 when I was running a business called Resource Equipment Limited, which was a specialist pumping and dewatering business. And Michael came on board back then to head a new division we created to service the oil and gas industry. And he grew that division from virtually nothing into a highly profitable unit and probably the biggest in Australia, specialising in oil and gas. We worked together for around about 5 years until REL was acquired. In terms of Babylon, my observations are, and I've been a shareholder pretty much since inception, are that from a standing start just a few years ago, it showed a lot of promise. It's delivered growth in revenues. It's been capturing some of the big name mining clients, but at the same time, it's been having a few challenges, particularly in recent times. And I think these have, Michael and I have been speaking on and off over the years, but I think these have largely been around people issues and distractions that come from that. Funding issues that have prevented capitalising on some opportunities, and all the things you have to do to keep a small business growing and paying the bills. And there's been an acquisition that hasn't worked out as planned. So there have been a few issues despite the promise, and what I see for Babylon are opportunities in the water space that this business needs to capitalise on. and I've been, again, talking to Michael on and off this year about getting a new strategy that involves repairing the balance sheet, reducing the reliance the business has had on that sort of the lower margin engine rebuild business. There's money in it, but I don't believe that should be the prime focus for growing a successful business. Certainly it helps pay the bills, but we need to focus on building up, a specialty rental assets, which are much higher margin. And there already is a base fleet of equipment, which is pretty good utilisation, but we need to build this up further to capture long-term rental revenue opportunities that I know are out there. Also to focus on acquisition opportunities, and Michael will touch on that in a minute, and looking at adjacencies in the broader water management space. So in that respect, it's quite exciting getting set in Babylon, with all that's happening in the mining sector and in the water management space. So I'm really just coming on board to help focus the business. My aim is to help grow it to scale in that water management space and try to hopefully have a similar outcome to REL and build a business, build the same sort of business that we did back there. Just briefly on REL, that was acquired back in 2009 through a small listed shell. We bought a specialist pumping and dewatering business. Back then it was called Resource Equipment Rentals, rebranded to Resource Equipment Limited, or REL. We bought that for under $20 million. We grew the business. As mentioned, Michael joined in 2010. And 5 years later, we were acquired for around about $125 million. We were actually at some point had a market cap closer to 200. That business is now called National Pump and Energy, and it's the largest in Australia. And I wanted to mention REL because there are factors that attracted me to buying that business back in 2009 are really still all there today, and they're set out on the slide here. But the key ones are virtually every mine has got water issues. It's either got too much water or not enough water. So the management, movement, storage, treatment of water is a big issue at pretty much every mine. In terms of water ingress, coming into open pit mines, in addition to heavy rainfall that might occur, most of the problem of having too much water comes from intersecting the subterranean water table. And it's the example I like to give there is if you're down at the beach when you're a kid and you dug a hole, once you hit that water table, if you kept on digging, the water just keeps coming in. It does not go away. And the deeper you go, the more water comes in. In the West, there's a massive subterranean water table out there, and obviously there's a lot of digging going on every single day by the mines, going down deeper. So to deal with the water, it has to be pumped out. If you don't pump it out, you can't mine, simple as that. As you go deeper, the complexity changes, the flow rates can increase, the water qualities can change, and you need more and more horsepower to discharge the water vertically straight up out of the mine. And then this is really on a 24/7 basis, so it doesn't stop. Then once you've got the water out of the mine, it needs to be managed in an environmentally safe way, and there's a lot of rules around that. So there's lots of issues. It's a very specialist field that requires expertise in things like system design, in equipment selection, equipment setup, operations and maintenance. And Babylon actually has these skills and equipment in place. In my view, it just needs to really build on them. So the basis is there to build off. What's probably changed since I have been out of the game is the ESG movement and the obligations on miners to responsibly manage their water, and the impact on the environment and communities. But all the obligations have increased, and they'll continue to do so. And I think this will create more demand in that broader water management space, not just pumping. Generally water management, water testing, purification, and various other adjacencies in that sort of mine water space. Just interestingly, everyone's talking about hydrogen at the moment. And I know in my current role, I run a business called Pacific Energy. We provide power and energy solutions to remote mines. And all our clients are talking about hydrogen at the moment, and they're keen to explore and progress. And whilst that market, I think, will take some time to develop, Obviously, the sole ingredient to creating hydrogen is water. And when you're on a remote mine, and just about all the mines are remote, you've got to get some water from somewhere. And to make hydrogen, you need pure water. The purer the water, the more hydrogen you can extract. But dirty water doesn't cut it. So therefore, accessing and treating water on mine sites for hydrogen is an area that will surely create opportunities in the years ahead. And again, we'd like to be ahead of the curve on that. It's just an example. Again, it's not tomorrow, but it's something we should be and will start to focus on in developing this business in that water space. So I reckon that water space has got big opportunities. It's being driven by lots of different factors. I'm happy to get on board with Babylon. I know Michael and like Michael, and we've worked well together in the past. I'm keen to take on the chair and let him shed those responsibilities and really just focus on growing the business and making the most out of the opportunities we can find. As Michael said, I'm not taking any fees for this. I'd rather get a swag of performance equity, and if we can deliver, that will be my remuneration. And if we don't deliver, I'll get nothing for my efforts. So that's about all from me. I'll hand it back to Michael to continue with the presentation.
Okay, thank you, Jamie. We started Babylon with a blank piece of paper from a standing start, but as Jamie alluded to, we're not at a standing start right now. Our strategy to expand our higher margin rental and industrial services area has a good base to grow from. We have contracts in place for water management and for power generation with some major players. And there's also opportunities there for us to close and to execute to grow that side of the business. So the hard work that we've put in the past few years is starting to pay, come to fruition and pay dividends for the company. It's just now about focusing on where we're going to have the best bang for our buck and the best thing for the company going forward. So we have a handful of opportunities to execute on. But that being said, our existing maintenance services business, it's not going to go just off into the Netherlands. We have opportunities there. We want to repurpose our workforce, supply chains, and workshops to support our own gear, because we make money by putting our gear out and make higher margins than repairing other people's equipment. But having those workshops and having some core contracts, which are profitable, will continue to let us operate the workshops, give us a foothold into clients, and be able to attract and retain the workforce that we need by having the diesel mechanics, the electricians, and the support staff to ready our assets. So it's not a matter of chopping off so much as repurposing and working with the processes that we have in place to make more money and be more profitable with what we have in place. It's a bit of a wild and woolly world at the moment, but our client base across the top, the BHP, F&G, Rio, and Alcoa, those are our largest clients. Currently, they've been our largest clients for the past couple of years. We deal with large blue chip companies. They will continue to operate. They will continue to mine. They will continue to execute their business plans, and we're critical and business critical for their operations. We are working with all those companies, both on the asset maintenance side and I think all those companies as well from a rental point of view. So it's just a matter of adjusting the segment that we're going in and prioritizing what we want to do with those companies going forward. So a brief corporate snapshot. Now, this presentation was originally released to the stock market 31st of May. The one update to this slide would be our substantial and major shareholders. Entities controlled by Jeff Lord participated in the recent placement, and his activity or his levels increased from a 17% to a 19.9% with participation support through our placement. Highlights going forward. We still see continued revenue growth, which is the base of the business for us to grow from and to execute our strategy from. We've strengthened the board with an independent non-executive chairman. That's improved both our industry knowledge and our skills our skill set as a board, but also from a governance point of view to be able to separate the managing director and chairman roles. We'll refocus on higher margin operations with rationalization of our lower margin services. It's just a natural progression that we need to make. And like I said, we'll leverage a strong outlook for our Australian mining sector. Those guys we just mentioned, they're going to continue to operate. We're there. We're suppliers to all those guys. It's just a matter of making sure that we can go in under the segments that are going to be best for our company and best for our growth going forward, but still continue to provide critical services for those guys. Last, we are in discussions with potential acquisitions. We always have potential acquisitions on the horizon that we're looking out for and evaluating. It's something that we think that there's still a bit of an opportunity for us to consolidate. And our focus in our filtering system is on rental and water management and making sure that future potential acquisitions fit our core strategy of where we want to be. So that's it for the formal presentation. If we want to have some questions.
Great, thanks, Michael and Jamie. Look, we've got a few questions that have come through. Just remember, if you do have a question, please click on the Q&A box at the bottom of the screen and type in your question and submit. So I guess the first question we have, Michael and Jamie, is really around you're undertaking an entitlement offer and placement. And I'm just wondering if you could provide a bit of an overview of this cap raising and maybe talk about what the funds will be used for going forward.
Okay, thanks, Colin. Yes, we are in a current offer period for a rights offer, but we've just completed a small placement. The placement was about $1 million, less fees. The placement was oversubscribed, and the funds are now with the company. Shareholders should have received yesterday emails, or the mailouts were released yesterday for a fully underwritten rights offer to raise $6.36 million less fees. Eligible shareholders can purchase 4 shares for every 5 that they currently own. We said it's fully underwritten. The offer is at 0.6 cents, and because it's fully underwritten, we expect to, we'll raise the full 6.36 million, and eligible shareholders are all entitled to participate. The funds that come in will serve 2 major purposes. The first is we have convertible loans that are coming due at the end of the financial year. We will pay off those convertible loans, which will of about 4.475 million. The loan payoff will improve our balance sheet, which will take a big swag of current liabilities off our balance sheet, which will position us for future opportunities, future growth. And the rest of the cash that comes in is earmarked for asset purchases, and it's assets or potential acquisitions that are fitting the strategy, where it's rental assets, water management assets for use of the company. Those are the areas that provide the highest return for the company, and that's what we want to use our capital for.
Great. Just another question that's just popped up, and it's in regards to water management. Presumably these miners already have suppliers and solutions in place. So I guess the question's asking, you need to snatch market share off these incumbents. Just wondering if that's correct, and why would they switch to Babylon Pump and Power?
Well, a bit of both. There is an established market, and what we found is there is 1 or 2 kind of dominant players in the market. Now, with size and scale, generally becomes a lack of focus and lack of flexibility. We feel like our offering to clients is tailored for their needs, being a bit smaller, a bit more nimble. We've had great uptake from the majors. And then also, mines are constantly expanding. So as they need to find more resource and more areas to mine, you have to go in and manage the water as the mines evolve. And there's always opportunities there. And we see some unique opportunities with some unique equipment from the early stages. So after, drilling is early days when drilling is commenced, all the way through to the tail end of the water management, whether it be disposal or treatment on the back end. Like I said, we've been successful in the fact that we're nimble, small. We have unique equipment. We specialize in the big stuff. So if you see the photo that's on the presentation right now, the final photo, there's a large pump there. Generally lead time for that sort of equipment, 25, 30 weeks, if you're lucky. So by owning that equipment right now, and then also through strategic acquisitions of equipment going forward, we feel like if you have the gear, it will be deployed.
Probably worth adding, Michael, a couple of things. One is that you've had to knock back opportunities in the past from lack of equipment, and again, that's one of the key things we want to use some of this money for, is to build up our assets. But also we'll be expanding our sales team as well, in line with the increase in asset base as well. And certainly there'll be some pinching of business from other customers. And yes, we'll have to be competitive, but I think having the nimbleness that Michael's mentioned, having new equipment, mostly very new or as new equipment, is really important. And that sort of that hunger for servicing the client in a smaller company like us, I think does help stand us out from the two bigger players that are out there in the market.
Yeah, key success in rental is your maintenance program, to making sure that you have equipment that is fit for purpose and ready to go. And we've proven that we have a great maintenance service in the fact that clients come to us to rebuild their gear, and that brings a lot of opportunities our way, and they have confidence in our equipment going forward, knowing the level of service that we provide to them for their larger equipment as well.
Great. Look, just another question that's just come through. I'm just wondering, Michael, if you could provide a bit of a brief SWOT overview of the strategy to win market share in what I assume are relatively sticky markets.
Well, our strength, as Jamie alluded, is number one, having some key pieces of equipment that are not your stock standard stuff that the other rental companies have. The small bits of gear. Having the large, unique stuff allows you to have a footprint on site and be able to expand from there, getting a toehold with something that's unique. So that is a strength. Our client relationships and the fact that we're tied in at the highest levels on a maintenance program as well allows us the strength of relationships there. Our weakness has been lack of equipment and availability of funds to acquire new equipment. And also having a bit of a strength, having a bit of a wider range of services. We found as we go in and we're repairing people's equipment, we're getting the rental opportunities, or as we're providing rental equipment, because we're really good at the maintenance, we're getting more and more business coming our way. So clients are looking for really one supplier to yell at. It just makes it a lot easier if they have one point of contact where they can get some of their key water management assets repaired, where they can get replacement assets from us to support it during that downtime. Those are the opportunities that we see, and opportunities going forward, or as we start to connect the dots all the way from the front end of the business to the back end of the water management. We have opportunities of water disposal, water treatment that we've had a few small successes with that we want to build on. Whether it be through organic opportunities for us to grow or potential opportunities for acquisition.
Yeah, I'll just add a couple of opportunities as well, and that is, Michael just sort of touched on them, but the other adjacencies in water management. So we're talking about pumping and especially pumping and rental, but the other adjacencies could be water treatment, water purification, all the other sorts of site services that are needed with water management on site is an obvious opportunity for us. In terms of threats, I think the main one's always the customer doing it themselves, deciding, we'll take this on ourselves. And we've seen, I've seen over the years, the sort of trend that can go from insourcing to outsourcing to insourcing to outsourcing. that's I guess a threat that could happen if customers start doing it themselves. But invariably that always backfires because they underestimate the expertise and skills involved. And I think the fact that Michael's got so many customers that are outsourcing the maintenance and rebuilds on engines, which we use to drive pumps, tells you that they won't want to be doing that service themselves in-house. It's quite big specialty equipment.
I guess the next question really leads on from that, and in terms of who are your biggest competitors in the market?
The big competitors that we see right now are our company I was previously worked for, NPE, and also there's another one, local, Yuan. Both those companies have great capabilities and have grown in scale over the years. We feel like that we offer something a bit different. A larger company like an NPE, they have a great big rental fleet and a sales team and whatnot. But we're not trying to be everything for everyone. I'm not interested in sewer bypass work. We're trying to deploy little pumps throughout a bunch of different branches. We tend to have the larger stuff that's a bit stickier on site, where we concentrate on a great service for mine site and resource opportunities. And with Yuan, they've grown in scale over the past few years. They offer a suite of products. My understanding is they tend to also sell product as well, generators and those type of solutions to clients. And we see opportunity in that like Jamie said, people try to do it themselves, and generally they realize they're not good at it. So it's a matter of time before we can come in behind that and offer a rental solution and a repair solution for equipment that has mobilized to site and it's not working like it should.
Great. Just in terms of, I guess, the acquisition strategy, I know you touched on it a little bit earlier, but just wondering if you could expand a bit more on the sectors you're particularly looking at and how advanced are discussions?
It's acquisitions are a funny subject because you might talk to somebody for a couple of years before anything is worked out. So we have many guys that we've been speaking to for a number of time periods and that sort of stuff. We have opportunities that we're progressing. We have nothing to report, nothing material that we can or need to release. We have no agreements in place. But what we're looking at in that area is companies that have assets. So whether it be asset acquisitions or potentially share acquisitions where we buy a company that is asset heavy and performing services. So that either which way, we own big hunks of metal that have recurring revenue with contracts in place. And that's kind of what we're targeting.
I guess with this refocus, what's going to happen to the maintenance and rebuild services for mining equipment business? I mean, will this remain part of the business, or is there potential to spin it out, or what's happening there?
Yeah, it's a critical part of our business in the fact that we have these workshops and we have mechanics that are providing a great service to clients. It's a matter of just an evolution. So instead of repairing and rebuilding engines, components, generators, pumps for, say, the likes of a BHP or a Rio, we want to repair our own assets. It's just we haven't had a large enough rental fleet to be able to fully utilize our workshops. So we have to make sure that our guys are busy, that we're recovering their time, and we've been able to do that through some very specialty type rebuild services. So we're very grateful for that. It's opened up a worldwide supply chain, and it's also brought in lots of opportunities and made lots of connections on site. So the plan is not for it to so much go away, but repurpose. And it's not going to be an overnight activity either. We're not going to flip the switch, on a certain day and say we're no longer doing this work. It's just a matter of the mentality and the strategy to make sure that the repair work that we're doing is fit for what we want to achieve in our strategy, and then also be able to push our own assets and fill up that workshop time with profitable work for ourselves.
Great. And look, you've talked about accelerating growth and moving to profitability. I'm just wondering, what are you doing, I guess, to increase margins?
That will really be our mixture of works, meaning the industrial services and the rental, especially rental, are very high margin for us. So as we're able to grow those portions and those segments of the business, our margins will increase overall. And then as we selectively begin to maybe not go after the maintenance work and the asset repair work that we've done previously, we'll naturally start dropping off some of the lower margin works. So that's the key for us from a high level, is what are we going to pursue and how are we going to, I guess, put our money where our mouth is. And that's the point of the capital raising, to be able to go after assets and asset-rich potential acquisitions to feed that part of the business. So that's going to be the key area.
Yeah, just to add to that, my experience over 30 years in specialty rental businesses is, gross profit margin on rental is, should be able to get in the high 60s into the 70%. On engine rebuild services, you might be more like 15 or 20%. So clearly, there's money to be made there. But the more equipment that we can get and that we can get out working, it will lift the overall margin of the business, margins for the business. But also rental businesses, as you grow them, pretty much have a stable overhead. You don't really have to grow your overheads too much because you've got a lot more assets out there on site. So that also, really does lead to some attractive metrics when you start to analyse scale coming into a rental business. And again, that's what we're really chasing here.
Great. Well, there are a few more questions, but they're just conscious of time. We're coming up to time on the webinar. I guess those questions we haven't got around to can be answered off air with Michael. His details are provided on the screen at the moment. I guess that concludes today's webinar. And as I said from the outset, a recorded copy of the webinar will be available shortly on the company's website. I guess with the refocus to higher growth and improved margins, it's certainly a very exciting time for Babylon Pump and Power. I'd like to thank Michael and Jamie for today's presentation. And thank you to everyone for joining us today.